Welcome to our stock trades. This is going to be a message to all of the Voyager Digital shareholders. Now, we just covered this video literally 5 days ago regarding my intrinsic value calculation of the Voyager Digital stock, and I went ahead and I specifically talked about what are my thoughts on the company's balance sheet, income statement, statement of cash flows, the debt that they have, and the crypto winter. So I recommend looking at the video for more context, but this is going to be more of a one-on-one video. And just to talk about this, because this is something very important that YouTube needs to hear, okay? So, first off, I'm really sorry. This may be very painful. I completely understand. A lot of people most likely, if they're new in the market, have probably over-leveraged themselves. Right now, what we're experiencing is a 2008 financial crisis. I put this in quotation. I'll explain why I'm doing that, of cryptocurrency. Now, cryptocurrency in the global economy is a nothing burger. So which means that even if it's like, let's say, a 1 trillion, it's spread across the world. So that crashing doesn't mean nothing to the global economy, right? Or the United States economy. So with that stated, this crash doesn't mean anything in the global context, right? So reason why I'm saying that is it is nowhere near the severity of 2008, right? That's a whole different story, but it shares the same variables. So let me explain. When the 2008 financial crisis happened, we had the mortgage-backed securities and we had the collapse of Lehman Brothers and Bear Stearns, right? And then we had AIG take a hit, which was heavily connected with other parts of the economy. And then the whole world economy is connected. So the ripple started to take effect and there were mass layoffs everywhere. We're experiencing that type of variable within crypto land. A lot of, you have to ask yourself, why is cryptocurrency so high and how did it jump up this high? Well, it was because people were over leveraging themselves. We had individuals paying an above market return, 8 to 9% to 18% interest. I mean, are you kidding me? It's obviously a scam, right? You can't do that, right? And Warren Buffett said it best, when the tide goes out, you're going to see who's swimming naked. And this whole 3AC Arrow crap, well, they were swimming naked, and now Voyager is swimming naked. Now you have to calculate how much cash they have, right? It's in comparison to the debt. And why do that, right? Why do that? Because it was very simple. Yeah, the revenues look great, right? But in conjunction to what? The revenues have been crap before that, right? And more specifically, in the past 2 years, we were on a risk-on period where if you look at the M1 and M2 money supply, the Federal Reserve has pumped the crap out of the economy. They put so much money in, which caused everything to be overvalued. And then you got people staying home, which, people started trading, and then all the cryptocurrency came in. So this is a cycle that we experience, it dates back all the way to 1929, right? And it's going to happen again, right? Let this be your lesson learned. This is going to sound harsh, but a lot of individuals came to me saying, hey, I watched this video, X, Y, and Z. They said it's a great stock and all this. Listen, guys, let me be very clear. You got to look at the debt, okay? You got to look at the current ratio, the debt to equity ratio, the balance sheet, the income statement, statement of cash flows. You got to look at how much debt this company has. Like, what is the liabilities attached to the equity, and graph that and find the current ratio. There's a lot of calculations that you need to do and really understand, is this a sounding investment? And then, for some reason, people just keep buying it because they have this hopium dream that they're going to magically get themselves out of poverty. Listen, guys, the real stock market's here, okay? Which means that if you don't know how to analyze a company, and if you don't know how to actually find the intrinsic value of a company and actually know how to, not just that, you can't just do a bunch of DCFs and think that's how it's done. You need to go in and actually say, what is the business model of the company? Is this company going to survive in 10 years from now? And What are the competitors of the company? How are they evaluated? What is their price to sales versus their intrinsic value calculation, their revenue multiple 10 years from the past and extrapolated, to 2-3 years in the future? It's like a science, but an art. Okay. So I want you guys to hopefully take this as, most likely an expensive learning lesson. Do your own due diligence. Okay. And, just be careful, because right now, the stock, the Federal Reserve is taking money out of the system, okay? And now it's very difficult to make money in the market because it's not, risk on. Before you put crap in the market and the crap got bigger because of everything was inflated. We're about to enter a crypto winter, which we already have. You see a bunch of crypto agencies right now basically lay off people. We are going to see now who's going to survive, who has been overextended, who has been over-leveraged. And guess what, ladies and gentlemen? You're going to see a domino effect, and it is going to be great, right? All of these assholes that basically try to take advantage of people, they're all going to collapse, okay? Because the market is correcting itself and capitalism is taking into effect. So I hope this video is helpful. My recommendation is to watch this video on how I came to the conclusion that even with all they do in their growth rate, they're still going to be $1 stock. And now they're 50 cents because of the leverage that they have that they just disclosed to you guys. Now, they could have gotten the liquidity, but does that even leave them with any cash to grow? They're at surviving now. So why put your hard-earned money? I can't give financial advice because I'm not a financial advisor. But this is just I'm just thinking for myself. Why would I put my hard-earned work money in this bullshit crap when I have Meta Facebook at all-time lows, right? I have Alibaba, which, again, Chinese stocks, so it can be, the discount is what, 30, 45% discount rate probably. That comes with risks, right? You got Google, which is a great stock, right? And it's been hit hard, right? There's just so much, PayPal, right? There's just so much opportunity in the market. I don't understand why folks are gone to this crap. Like, you gone to the shitter, right? So I'm sorry this sounds vulgar, right? Just be smart. Learn how to, read a financial statement. Look at the annual 10K report, the 8K, just learn, okay? So long story short, I hope this was helpful, and just don't fall scam to this and teach this learning lesson to other people and to your children so they don't make the same stupid mistake. This company is crap, and I said it. I don't recommend this company. Anywho, it's a pleasure and honor, and I'll see you guys on the next one.